Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special guest. Let me correct that, a very special repeat guest. She is an industry thought leader, a technology evangelist. She specializes in automating the lending process and is an expert at strategic consultation. Please help me welcome Lisa Schreiber, president at LSK Consultants. Lisa, welcome back to the show.
Thanks so much. I really appreciate being back here, speaking with you and all the folks that follow your podcasts.
Excellent. Well, thank you. You always have a wealth of knowledge and expertise. You're out there in the trenches, talking to lenders, working with them. Let's start with, what are some of the things that you think are happening in the market that, we need to be prepared for and really start addressing?
Gosh, there's so much going on right now, right? We've seen a change in volumes from refinance to purchase. I know everybody's speaking about that. With that, we also see changes to profitability, margins getting compressed, rate hikes. I mean, we've got so many things going on in the world right now that certainly impact our business. So what I'm really seeing is an awful lot of people really just trying to figure out what to do next. Whether it be, how to serve the borrowers that they have, how to grow their market space, and really how to reduce those costs.
Well, let's dive into that because I couldn't agree with you more. There's radically changing market conditions. Like you said, we talked about volume, but there's also margin compression. Origination costs are still rising. Rates are rising. And everyone asks you, they ask me, okay, so where do we go from here? What's next? What are some of the things that lenders can do to then reduce cost? What are some of the pain points that you see lenders trying to address? And then we'll dive into what are some of the ways they can actually do that?
Well, operationally, for sure, we see that the best thing to do, like the quickest thing to do, I think, would be just to look at redundancies. What are your people doing that is very redundant in the process? Checking the checker really became, unfortunately, back in vogue when we were doing the refi business, right? Because we were scrambling for new staff. They really weren't probably educated in the mortgage business even at that time. We were just kind of throwing bodies at everything. And so what happened is groups were formed, this group does this group does this, you take this piece, I take this piece, and really just regrouping on the process itself. Like what should the process be? And where do we have the staff to make that happen the most efficiently?
Oh, I love that tip, and I hope our listeners are writing that down. First, look for those redundancies. Like you said, so many people during the refi boom just added additional processes. They had inexperienced people. So now you have a check of the checker, the check's the checker, and the next thing you know, when volumes start to constrict, when price compression is happening, people really have to look at, do I really need to check this checklist 5 times? Right. So that's a great tip. Let's talk about what are some of the other pain points. Operationally, we talked about, let's look at the checker, but is there other things that people can do, or is there specific aspects of operations? I've seen AI roll out in underwriting. I think some of the pricing models and different pricing tools are allowing to eliminate some of that redundancy. What are some of the other tools you're seeing? And let's talk about some of the tech that's helping reduce some of these redundancies.
Yeah, for sure. I'm definitely seeing, another aspect of that I wanted to bring up is the use of outsourcing models, right? So that also was kind of thrown in the mix of all that. So a lot of the tools that are available are related to presenting data to your staff, right? Instead of them going and finding it, manual checklists, all of that. How can we really look at the tools like OCR, right, where we're stripping off that data, then using that in an AI format so that it can present that information to your users? I am definitely seeing folks go in that direction. I'm also seeing a lot of new entrants into more of that LOS space that are looking at breaking down things like conditions, breaking down components of the business, where you could actually utilize some of those more inexperienced folks to do jobs that maybe you're paying more, higher wage people today. So, for example, paying an underwriter to do something that a more inexperienced person can do by breaking down a process.
Oh, that is such a good insight, because I think as people look at their process, they're like, here's the 5, 10, 15 things I do. And they almost kind of wear it as a badge of courage. But do you really need that top paid underwriter ordering a VOE or pulling credit or something like that? I mean, you can have a less experienced person handle some of those easier tasks. Do you feel as people are breaking it down, are they really trying to focus on how can we best manufacture a loan, and kind of here's the person who does VOEs and they're going to get really good at it and they're going to handle these 5 or 10 tasks? How do you see that breaking down?
Yeah. What I think for those that are embracing the technology and embracing in a more efficient way, like they're willing to put their money into this and commit to it, I think that they're seeing not only how can they better utilize their staff, but then how can they automate some of these things, right? So VOE is a really easy one. Everybody has to do a VOE at least once in the process, if not more. And so why wouldn't you automate that and then present that to the person and just say, hey, it matches, we're good, let's go. Or, hey, it doesn't match, somebody needs to take action. So it's not just breaking down those tasks, but then it's also with the task itself, how can we automate that?
Such a good point. And I think people struggle. Sometimes they try to automate the most difficult aspect of the process. Look at the manual, redundant areas and say, hey, let's do these simple things. And it's amazing. You save a minute here, 5 minutes here, 20 minutes here. That adds up very quickly to the amount of time that can be saved and the amount of resources that you're spending to complete those different transactions. Let's talk about some of the other things. As you consult with lenders, they're worried about price compression, margin compression. What are some of the things they can do from a big picture perspective? You know, we talked about automation and some of those, but as the lender, where do they really need to be focusing their attention?
Well, I definitely think, the things that we just discussed are very important. I think also this is a good opportunity for lenders to take a relook at their strategy. So, in the last couple of years, they've been more or less fed, right, through the refinance boom. And I've been in the mortgage business a long time. We've been doing this a long time. So, generally when we get fed, we kind of let it come to us. And then when we're not being fed, we panic and then we just start slashing. So really thinking about the strategy. What does this year look like for us? What does next year look like for us? What do we want to not just invest in, but who do we want to be? Like, what do we want to look like? Are we going to be more of a retail purchase-driven shop? Are we going to be more consumer-oriented? Are we going to try to find technologies that get us in front of the consumer? Are we going to be third-party? Are we going to be an aggregator? Those are the things that people have to reassess at this point, because they need to understand how to price their deals, what kind of margins can they get, who are their investor partners, right? All of those things really should be reassessed right now.
Oh, excellent insight, because I think so many times when the market starts to shift, people get comfortable in, well, this is what we've always done, or these are the type of loans that we've always done, or this is how we've operated. And it may not be how they should continue to operate moving forward. What are some of the technologies out there that you say, wow, that's some pretty cool technology? Is there any that are kind of catching your attention? I know I've seen a lot more technologies, as you said. As lenders stop being fed as much, they've got to find ways to engage with borrowers, whether that's customer experience platforms, enhanced CRMs. What are some of the things you're seeing in the marketplace?
Well, certainly one of the things that I've been focused on, as you probably know and some of your listeners do, is I've been focused a lot on the non-QM space. Yep. So primarily, it's just something that I got into a few years ago when I first built Sprout with the team. And then, of course, at New Resin now, one of my advisory clients is LoanX. Tools like that. So again, like when you're thinking about your strategy and you're thinking about, do I need to enhance my product set? What tools are out there for that particular product set, right? Because everybody's got LOSs, everybody's got kind of their version of a CRM or point of sale tool. Again, that goes to your strategy. Am I consumer oriented versus am I third party oriented? So I think that, by looking at your strategy, then you could look at the tools available to you that enables that strategy. So I know, Mike, you probably know a lot more about some of the maybe point of sale tools. Again, in the non-QM space, I know that most product and pricing engines are trying to address that because it is a very large growing part of what we're doing today.
Absolutely. And like you said, there are so many tools out there. I think one of the biggest challenges is people get enamored by the shiny object syndrome, right? And then they panic now of, we got to start constricting, they start cutting and not really looking at what do we need to do. One of the things that I hope comes from this is we stop being so transaction focused and we focus more on building the relationships, right? Average borrower is going to get 7 to 11 loans over the course of their lifetime. 85% currently don't go back to the original lender.
Yeah. And that really hasn't changed.
No, and isn't that appalling?
Years ago, we talked about the same statistics.
Yeah, and it really is appalling that as an industry, we really can't, move the needle in one direction to improve that. You talked about LoanX. Tell a little bit of our listeners, what is LoanX and kind of where does that fit in the non-QM space?
Sure. So LoanX is a product and pricing engine primarily focused on the non-QM space, although there are some people that are using it as well for agency, and I believe that they will be expanding into a full product and pricing engine with all products. But today, it's more focused on the non-QM space. So just as an example, from November, which I think that they maybe had around 9,000 transactions in November, and they are a point of sale. So what they do is scenarios and where people are looking to find the product and price that is relevant to their borrower, and the investor then, of course, that would purchase that loan. It gives you a really good indication of where that market's going. So like in November, I think of about 9,000 scenarios running. In just the month of February, it was well over 16,000.
Wow.
So it's a great point of sale tool that has APIs that you could integrate into whatever systems you want, right? And I know that working very closely with Encompass is as an example. But it also is a great tool because it'll show you the growth. It'll give you statistics. It'll give you parameters of the loans that are being looked at the borrower stage. So it's a great tool for people looking to grow into the non-QM space, and of course those that are using it today to grow their business.
Fantastic. You and I have spoke on a number of panels together. We've been part of focus groups. Tell me, live conferences, going to them, not going to them. Will I see you out there on the road? Give me a feel for where you're at kind of with conferences, and if you think we'll continue to pick up momentum for more and more live events throughout 2022.
Yeah, I'm super excited about live events. I think that they're back. I think we all need each other. We miss each other, right? I mean, I certainly miss seeing you and so many of our friends and colleagues. I know for me personally, my conferences this year will be the secondary conference in New York. That's always a great one. There is an IMF, I apologize for that, non-QM conference that's happening in June. So I do participate in that, and I'll be speaking at that as well. And then, of course, the big MBA conference generally in the fall. So those are the ones I'm looking for. As a consultant, I have to use my time wisely. And so I just want to make sure that I'm seeing my clients where they're at.
I love that last phrase of you've got to be where your clients are at. I'll be heading off to ICE, looking forward to that in Las Vegas because that's where a lot of our clients are at. And strategically, You want to be in alignment with them. But I agree with you. I miss seeing you. I miss seeing the people in the industry. I think there's been a number of great things that have happened digitally during COVID, and there's much greater outreach and everything, but nothing takes the place of breaking bread with somebody, seeing them face to face, getting that hug of old friends that you haven't seen in a while. So I look forward to seeing you out on the trail. We've talked about consulting. Let's talk about what is LSK Consulting. Tell our listeners what it is you specialize in doing, and more importantly, how can they get a hold of you if they're looking for additional help?
Oh, thank you. So LSK Consulting is primarily me. And so I, for well over 30 years now, I've been in the mortgage business, and I've actually had this consulting business since 2007. So on and off, I consult, and then I've been ending up going to some larger companies, as you know, to work with them directly. But I think this is my plan going forward, just to stick to the consulting world. I'm really enjoying it. Typically, my clients are either technology-oriented companies or large lenders, sometimes small lenders, that are looking to either start a channel of business or enhance and create a better efficient process. And that efficient process can be anywhere from product development to marketing and training, all the way through operational efficiencies and technologies used to make somebody more efficient. So it really kind of runs the gamut of origination, I would say, and really how to make somebody more successful.
Excellent. Lisa, what's the best way people can get a hold of you? If they want to find out more, if they want to dive deeper into some of the topics that we've addressed today, how can they get a hold of you?
Well, my email is easy. It's engagelsk@gmail.com. LinkedIn, I'm on all the time. I find it an excellent tool for keeping in touch and also for interacting with folks, just like we did this morning. So LinkedIn is always the easiest way, or just email me. My number also is 703-282-5433. I've had the same number for like 20 years. But usually it's friends and those referrals that I get, and I really, really appreciate that.
Excellent, Lisa. You always have a wealth of knowledge. I greatly appreciate you joining us today. I know our listeners are jotting down notes and looking at some of the things that we discussed. I just want to thank you again for being a guest on this episode of the Fintech Hunting Podcast.
Thanks so much, Michael. I really appreciate it.